Now Ron Burgundy.
Welcome guys. Thanks for being here tonight, and welcome for signing in remote. Happy to have you still with us, even though you can't make it here physically. My name is Judith Liu, and I'm here tonight to just kind of talk to you guys a little bit about grants. And so we're going to cover a bunch of different programs. I did, like I mentioned before, I did bring out a little sheet just so you can kind of condense some of the information. There's a lot of information. I do speak fairly quickly, so slow me down. If I have said something that kind of goes over your head. But what we're going to primarily talk about are grants that are more localized. And then we'll also talk a little bit about what if I buy in Connecticut? What if I buy in Jersey? What if I don't want to stay in Westchester? So we'll talk a little bit about those grants. I'm not going to go into detail, but just kind of let you know how to find out about those as well. So we'll talk definitely tonight about Westchester. We'll talk about New York State in general, and then we'll talk a little bit about the 5 boroughs. Because depending on where you want to buy is going to be very specific to the type of program you can apply for and how it'll work and how that kind of all comes together. So we'll spend a little bit of time, and then we will definitely talk about 2 programs specifically for veterans. All right, so the other programs that are not specific to veterans are not exclusive. So there's still programs you can kind of combine them all. If you can combine them all, you can definitely layer and use them all. So we'll talk a little bit about layering. Which is kind of nice. The trick to layering is just as long as the funding source is not the same. That's the big thing. So what makes me qualified to talk in front of you about grants? I do work for a bank. Loan Depot is the company I work for. I've only been there a couple months. It's a mortgage banker. Prior to that, I was with HSBC for about 4.5 years. And I specialized in first-time home buying, community lending, really just doing the FHA, the VA, all the first-time home buying stuff, and did that for a while. And I worked with a lot of the nonprofit organizations. So did a lot of the hand-holding, the one-on-one. I spent more time with customers than the average loan officer did because that was the need. Kind of needed that. It was everyone's first time. Prior to that, my background is as a director of homeownership and financial literacy for a nonprofit organization here in White Plains called Westchester Residential Opportunities. I did that for 7 years. And in that organization, we basically taught credit, budgeting, and grant application. And I also used to underwrite some of the programs as well. And there's one program that I used to underwrite that I'll talk a little bit about tonight. So I know that one very, very well, and that's a real popular one. So, so I do have kind of that background in the grants and kind of the tips and tricks and what not to do, what to be careful about, the kinds of things that you don't want to put on your grant application, and what's really important to have on there. Okay. So without further ado, I am going to use Prezi tonight to talk a little bit about the programs, and just bear with me for 1 minute, and we'll get us going. It's a little temperamental. Ooh, hold on. All right, so like I said, we're going to discuss programs that are available, review eligibility requirements and restrictions. So I am going to talk to you about what determines you not to be eligible. I'm going to also go over the income limits with you guys, as well as the credit scores, the down payment, and again, the locale restrictions and the type of property. So there's a lot of different restrictions with different grants, and sometimes even restrictions with loan products as well. So it does kind of get a little overwhelming, and I'm going to try not to spin your heads too fast here tonight. So like I said, stop me if I do speak, because for me it's second nature, and for you guys you're hearing it for the first time. So let me know if there's anything that doesn't make sense or you want more clarification on. And I apologize, and I should have brought just a clicker with me. I didn't. All right, so let's talk a little bit about the local and county grants. So these 3 programs here are, these two programs here are very specific to our area. So there's an organization called Community Housing Incorporation. It's called CHI. It's known for CHI. And that's the first one in your block. And it's through the Affordable Housing Corporation grant. All right. And then there's the Home First Grant, HPD. Okay. So for CHI, let's just take a closer look at it. Sorry, this is So for CHI, this particular grant program can only be used in Westchester County and in Long Island, so Suffolk or Nassau County. And this is kind of a nice grant because this particular grant allows you to actually take advantage of up to $25,000 in down payment and or closing cost assistance. So it's really nice grant assistance.
Do you have to pay this back?
Good question. No and yes. There's a two-part answer to that. So depending on what's going on, we'll go into that, about the restrictions. There are no grants, let me take that back. There are some grants that will actually sit as a soft second lien against the property for a certain number of years. There's also what's called affordable housing in Westchester County. Are you familiar with that? So those types of property have what are called deed restrictions, and those deed restrictions do not allow you to sell for profit or just sell on the open market without some kind of permission. So those have restrictions. So the grants don't necessarily have deed restrictions, but they have more recapture provisions and resale restrictions. So you can sell it to whoever you want, but the time frame in which you sell it in will determine whether you have to pay back the money. And it sits as a lien, so you can't just sell it, nobody knows about it. It's recorded, when they do a title search, ding, it comes up, and they'll know you owe money if you're trying to sell. So we'll talk a little bit more about that, but good question. So technically, when you get the grant, you do not have to pay on it at all. You just live in the property, and that's how you actually pay back the grant, by remaining in the home for X amount of years. In this particular case, this is 10 years, this particular grant. There's a renovation aspect to it as well. A lot of people that do this grant, which is $25,000, 51% of those funds need to be used for renovations, and the remainder funds is not needed for the renovations, and or closing costs. So it depends. Standard grant typically for the down payment and or closing costs is about $10,000. So if your renovation starts to exceed the $12,750, then you start eating into which could be $12,250. Sorry, that's 51%. Then it could potentially eat into what you can use into down payment and closing. So it really depends on how extensive the renovations are.
If you don't have to do it,
You must.
you have
One of these programs where you got to use some renovation money, which kind of, why not use full 25? But 51% of the funds that you receive must be used for renovation, up to $25,000, and in some cases I've seen them go as high as $30,000. Which is kind of nice. So again, this is very specific just to Westchester County, Long Island, which is Nassau, Suffolk County. They used to do Orange and Putnam, and they don't really do this anymore. It's a nice program. There is a flyer that I circulated out to you guys, just so you can kind of see the increments. And we'll talk more about the increments, but just so you know the increments that come together. All right, so that's the website for CHI grants. So the next one is the HPD grant. This one's kind of cool. The HPD grant is we call it Home First. It's through New York. It's through the Department Housing Preservation Department, which is an entity of New York City. And basically, these funds are truly used for down payment and closing costs. And these are also a 10-year provision as well. So if you move before the 10 years, you try to sell, same thing, you have to pay back only a percentage, not 100%. It depends on how long you live there. But these are truly down payment and closing. There's no renovation costs there. Now, can you use the two? You guys know you can use the two?
You can layer? Can you layer them?
Not these two. These are exclusively for the 5 boroughs: Bronx, Brooklyn, Queens, New York City, Staten Island. Yeah.
The big NYC at the top.
NYC, any of the 5 boroughs, and only the 5 boroughs. Now, there are also rehab grants in the 5 boroughs as well, but they're usually like post-purchase. So if you are looking for any kind of rehab grants for your property purchase in the boroughs, if you're become eligible, you could apply for that once you own your home. Kind of elderly woman wants to come in. She wanted to come in for a reverse mortgage, and we didn't do that. So she said, well, then give me a cash out refinance. And I saw this very small fixed income. And I was like, this would have been an easy one. There's so much equity. And instead, I advised her to get her roof is falling apart. You know, by herself, living alone in this multifamily. A little scary, all by herself. and she was able to get the grant, came back a month later, and they said, thank you so much. You know, there are programs out there that can help you. You don't have to go out and get a mortgage to finance it. So it's another alternative to kind of avoid any additional expenses. All right? So that's HPD. We'll talk a little bit more about it. It is 6% of the purchase price. That's how that grant works. With a maximum of up to $15,000 down payment and or closing costs assistance where you need it. Let's break it up or give me 100% of it. I like to talk about it because it's so close to the Bronx. Sometimes some people, you know,
You never know who wants to buy in the Bronx or in the city.
All right, so that's that. So the next thing I just kind of don't know why it keeps.
It's a mind of its own.
Oh, it's not the wrong thing. That's wrong. It's a cool button here. Wow. All right, so there are different types of loan programs that could potentially be used for these grants. You have VA that specifically would be used with the other two veterans grants, only because some of these other grants have some restrictions, and some government loan products don't allow offsetting fees. So when you're looking to do a mortgage, you really want to know about, well, what program am I going to be doing, and what kind of financing can I do with that grant program? Because sometimes you cannot combine the two. So that's really important. FHA is also one of those types of, again, a government program. If you're interested in doing that, again, you got to be careful what can you do. Now, the CHI grant is one of those grants that certain lenders will allow with FHA and some lenders won't. So again, you could be going to, I'm just going to take an example, Citibank, and you could be going to Capital One, and one says they'll do it with FHA, the other one says they won't. So it's important to kind of shop around, do your education, and kind of, okay, well, who will do it, who won't. Sometimes the banks have what's called overlays, and the overlays will restrict the grant program just because the bank is nervous or uncomfortable with it or whatever it is. Right? So again, Sony makes a real popular type of mortgage product that takes anything. Like, it'll do anything under the sun. The other thing you have to keep in mind is we have what's called combined loan to values, and it's a really fun word that we're talking about. And that means is when you have your purchase price and your grants get added onto that. I'm sorry, you have your loan amount and your grants get added onto your loan amount. So then that sometimes goes beyond the appraised value too. Right? So for the sake of example, you have a $200,000 loan. You get a $25,000 grant. $225,000. But let's say your purchase price is only $210,000. That would bring you over 100% finance CLTV because of the grant, which is the lien, in terms of the lien, how much lien or lien debt that you have against the property. There are some products that don't allow that. So there are some restrictions with VA and FHA and things like that. And some may have some of those restrictions. So sometimes when you're using grants, again, it's, well, you approve it, but what are my restrictions on how much assistance I can get? So the questions kind of, you have to keep asking questions about what works with it. So it's really important that when you're talking to loan officers and you're working for your bank, that they are familiar with these grant programs that you're going to apply for. You don't want them to just put you in a product, say, hey, you're going to the grant, and then it blows up. And then you're not going anywhere because, oh, by the way, the CLTV is too high. Oh, we don't approve that grant. You don't want to be in that position. A lot of times, I get a lot of business because of disasters. It's great, I love it. You keep on knowing it's good. But you want to make sure whoever you're working with, that they know how to structure these products. Okay, it's really important. Same thing with USDA. USDA is another government entity, and it's for more rules. So if you're really out in Putnam or Dutchess and Orange, USDA is the way to go. You have a nice little rate for that. And then, of course, there's what's called conventional portfolio loans. But I'm mentioning these because these are the most common types of programs that would allow these types of grants in some cases. Portfolio loans can just be a very unique product that a lender is offering. And the product does allow for what we call subordinate financing. Subordinate financing is another way to do that. So some portfolio loans, like when I was at HSBC, it's a very unique product called Community Works. and it definitely allows for grants and has some flexibility on the field, and things like that. But it didn't always work, but sometimes they're depending on the grant. So again, you just gotta check and see what are those restrictions, are there any, what works, what doesn't work, things like that. Welcome. Okay. All right. So we're going to talk a little bit about and I apologize because this little thing moves a little bit too much and I played around with it. We're going to talk about income eligibility, we're going to talk about location, household size, credit score, and down. All right. So for CHI, the income limits, like I said, on the flyer that we have, the way that they use the income limits, and it's different for Westchester and it's different for Suffolk and Nassau County. So, for example, the average household is about 4 people. Okay, so we'll take a look at that one. So for a 4-person household, you're looking at so for Westchester County, for a 4-person household, total household income is $94,737. So, what consists of a household?
Everybody else works.
Anything with a heartbeat. No. Minus the dogs.
Yeah. Yes.
My dog works.
What's that?
I keep always work.
Any human being with a heartbeat counts. Your 1-year-old child, your 10-year-old, your grandmother, your sister that's going to be living with you, anyone that's going to be occupying that property that you plan to purchase, those are your household members. Anybody that's 18 or older, guess what? $94,110 is to include everybody's income. And then we'll look at total household income to determine eligibility. When you're talking to the lender may only care about the 2 people that are on that loan application. You can care less about everybody else. So just keep that in mind when you're, just because the lender says, yeah, you're good, you're qualified. The grant entity may say no. So different qualifying criteria for different things.
It's a little bit off topic. Would you happen to have the Orange County versus Nassau Suffolk
CHI
in there?
only allows, for Long Island? You say Orange County?
Orange County.
Only Nassau, Suffolk, and Westchester. Okay. Yeah. No, that's okay. That's okay.
I'm tuning in and out.
Yeah. No, we will talk about Orange. I have Orange County and another grant. Yep. All right. So that's CHI's income limit. So again, whoever you put on paper, identify on paper as your household members, that's what we're going to ask about. You can do a lot of So HPD, their income limits are a little lower. So we'll use the 4-person household. Again, total household members, just like I said, heartbeat that you identify as part of your household moving in to the property that you're going to be purchasing. 4-person household is $69,050 as total household income. Now keep in mind, if you are $1 over on either of these, you are ineligible. There's no, well, I'm gonna, no. It's all projected income. So when you look at your pay stubs, you look at everyone's income, and then you project what your income is going to be for the next 12 months moving forward. If you're doing a lot of overtime and you know your base pay is going to put you under, but your overtime is going to put you over, you need to put brakes on and slow that down. Okay? Just because you get declined for you apply, it doesn't work, always reapply it. They kind of restart it on January 1st, and they'll look at the income fresh again. So, don't be discouraged if that happens. It happens a lot sometimes. People are like, oh, that's it, I don't qualify. And then the person apply again, and then they qualify. Because now the overtime is kind of reset, right? So especially if you're that person that has that commission, bonus, or overtime type of income, just kind of slowly gets down. That's one way to do it. All right. So that's HP. So, again, just to kind of reiterate and go again, a household member is anyone that plans to reside in the home to own property within the plan to purchase. Household member consists of your children, it could be your spouse, it could be your parent, your cousin. Now, they have to have this show this intent to live with you. You can't just, you know, grab everybody so that you can qualify for the hybrid program. Right? They will ask. So be careful with that. And anyone over the age of 18 must provide income. Now, there's an exception to the age of 18 if the individual is a full-time student in college or university. They will not have to, if they have a part-time job, they won't have to use that. Okay, so that income's kind of normal. If there's any child support, some programs will use it to qualify you. When I think about their Social Security is also considered income, disability is considered income. Okay, that's all. Okay. An average, they'll estimate it. If it's court ordered and you can show that it's inconsistent, you know, but for the most part, if you don't provide it, know about it, okay? So if you want to use it to qualify, because remember, without you, if you're going to use the child support and mortgage, the grant entity's going to see that because they're going to see all the mortgage documents. So if you're going to provide it in one place, you better believe they're going to want to see it in the other place. So you can't hide one in one place and hide it in the other. So you need to make sure I'm going to use it or not. If you're not going to use it in one place, you're not going to use it in the other. Okay? And when you are using it, you're going to look at that. All right. Credit scores. So credit scores, for the most part, the grant agencies will allow you to go in as low as 620. Anything less than that, they start to get a little complicated. Right. And for the most part, with mortgages, you could go potentially as low as 580. You get a little comfortable there too, but it's doable depending on what's going on. They do want to just make sure that you are paying your bills on time. They're not going to really rigorously look at you like a lender does, but they just want to make sense of what are your bills, what's going on. Because they're going to also do what's called an affordability analysis. So they're going to look at your credit. If your credit's really low and you've got a lot of collections or debts, just keep in mind, you may even get turned down because you've got to address the different hiccups you have with your credit report. So the grant process could potentially stop right there, right? So it's really important to know what your credit score is. For the most part, it's only going to be 620, and everything on the up and up, you just move forward. There's no big ups, no blemishes, no derogatory that is still existing. You shouldn't have a problem with it. All right, so your contribution. For the most part, grant entities are looking for at least that 50% of funds going into it. You cannot do 100% financing in a partial grant. Even with a VA loan, you're going to still have to put some spending in the grant. Okay? But you have closing costs. So if the 3% doesn't have to down payment, it's just got to be in the transaction somewhere. Right? So it could be a combination of several funds. So programs like CHI will allow your 3% to come from a gift. It will allow it to come from another grant source. That's fine. So they're okay with that. In some cases, though, there's that 1% contribution, and that comes into the process. So we made it one of those loan programs that says you've got to do 3%, but you've got to at least have 1% of your own funds. So I always tell people, depending on what you're trying to do, depending on the product, depending on the grant or the loan product, whoever's the most restrictive for the rules of how much you bring to the table is really who you're going to adhere to. And sometimes what happens is grant entities will follow in line with the lender when it comes to a loan document. Even though they know, well, we're probably going to cover a lot of that for you anyway. But how much are you bringing to the table? So if you're doing 100% financing and a full seller's concession, a grant entity may not be okay with that. If you're putting literally zero funds into that. Okay? So just keep that in mind. Okay, so just as a little highlight, the CHI assistance is a maximum grant of up to $25,000. Minimum is typically 5, lately I've been seeing 10. So 10 in terms of the down payment. Look at the rehab. The rehab is a little separate. But in terms of the actual down payment, we're looking at 1% of the funds have to be for rehab. And the key thing with the CHI grant you're going to apply for this grant, you cannot be in contract on the home prior to being approved for the grant. So it's a little bit of a process. When you, I think I had put in, I don't think I could see my application, but I put the link. If you go onto the link, at the very bottom of the web page is actually an application. And there's actually also dates for events that they offer. The events that they require you to attend are two different types. One is an orientation. You cannot apply for the grant unless you attend the actual orientation. There's many of them actually, like Plains. Sometimes they do a bunch of Yonkers as well. They've done some in Mount Vernon and stuff. So they're scattered and they do a lot of those things. It's pretty local also. Once you attend the orientation event, then you have the option to take an educational program that they offer. And that educational program can be done online, it can be done in-house, whatever is comfortable for you. But those are two things that they require. The education doesn't have to happen through them, but they do offer. But the orientation must be attended through whatever they host. The next thing you're going to do is, once you attend the orientation, you'll submit an application. Unfortunately, the application process can take anywhere from 4 to 6 weeks for processing. Sometimes I got to call my buddy over there and like, get on it. They know me really well over there. I'm going to ask for a couple favors. The more complete your application is, the less back and forth they have to do with you. And the less of, oh, she's not ready to put it back on the bottom of the file. I've seen it. I've done it myself. This is the grant case anyway. You want to make sure you have a complete file because if you're not ready to go, you'll go right on the bottom of the file. So you did have a checklist in the application. You make sure you come through it, go through everything, ask questions before you submit to make sure you've got it all together. And if they go through the less times they have to go through your file, the sooner and quicker they can actually issue your grant certificate. You would go in either for a one-on-one or for a group session to receive that certificate. Once you have that certificate in your hand, it's good for 60 days. And that 60 days allows you to kind of go shopping. If your 60 days expires and you still haven't found property, again, you cannot. Well, at this point, you could potentially sign a contract because your grant certificate already. But you still have to get the grant administrator to clear. I made an offer. Is it going to work? Yes or no? And they kind of clear you. So there's a lot more of a process involved in between. But for the most part, you have to attend the orientation first. So you submit your application. You have to complete home buyer education. And you have to go in for a grant certificate counseling session. Certificates are good for 60 days, and you can get 1 30-day extension. So technically 90 days. And then if you don't obtain your certificate, don't obtain a property within 90 days, or at least get into contract within 90 days, you have to update all of your documents. Pay stub, bank statements, all that good stuff. And they might even pull credit again. All right. When they pull credit as part of the application, it's a soft pull. It doesn't actually affect your scores. I think they charge about maybe $13. And it's the trimers. It's also it's not very long. All right. So the HPD. So kind of a recap. It's up to $15,000. 100% of it can be used for closing costs and the down payment, or 6% of the purchase price, and you must be in contract prior to applying for the grant. It's the complete opposite. So you have got to find property, you've got to be in contract, have commitment on your loan, then you can submit an application. That's how the HPD works.
So how long does it take to process the HPD?
A lot faster. Because
you're
right in contracts.
Right.
So they're usually, I would say, average about 2 to 3 weeks. I mean, you do have to have the expectation to be set and to know they're going in, and you have to kind of let all parties know, listen, I'm applying for a grant and some time. So when you're setting a closing date, and you know you're going to be applying for this grant, where if you're buying a single-family house, 45, 60 days would be kind of the norm that you would set for a closing date. But in something like this, when you're using grants, I always add an extra 30 days. I always say you got an extra 30 days in my contract, so that sellers aren't, hounding you, harassing you to close. So it's really important that the grants can potentially put you out an extra 30 days to close. process. Because you've got other external money that has come to the table, okay? What can I tell you about HPV? It's advised that when you go to HPD, there are different counselors throughout the boroughs that are qualified to actually allow to assist you in the application. There's no way to actually apply online. You have to identify with one of the nonprofit organizations and do applications through those organizations. They will preliminarily qualify you for the grant. So when you find property, before you sign contract, you want to just check in with them and make sure, what are my chances of being qualified? Because if my whole loan is based on me getting, the $15,000, and I don't get it, I'm kind of screwed on that. That's going to be a problem. So you always want to make sure, and I always check with my customers, did you make sure that you sat with the counselor first before I put this in your loan? One thing I have found with both of these grants, in particular these two grants, not so much the other stuff we can talk about, is funds you don't have. So, ideally, you don't want to be in like October, November sometimes applying for these grants. You tend to dry up a little bit, and then there's this additional 30-day waiting period, and you're in contract sitting, waiting, and you've got your sellers are calling me, and the realtors are calling, what's going on? I'm like, I have nothing to do with this.
It's like a nail biter.
Yeah. It doesn't happen every year, but every once in a while, I've done this long enough where I've had borrowers go into a crisis mode. And I'm not trying to discourage you, I'm just saying you have to be prepared because sometimes money does run out. Last year, HPD ran out of funds for like 30 days, and they had to do like emergency funds. You just got to cash for that. And then 2 years prior, they ran out of funds. Again, they're very short little spurts, but they'll also let you know when to apply. So, sometimes that happens usually in the year. We need to get the location. So again, this is the recap. CHI is only Westchester, Suffolk, Westchester, Suffolk, and I use the business in Nassau County. And HPD is the fiber responsibility. You can't layer them. You can't use them in the same location. We'll talk about it. All right. And just keep in mind, the sex properties that you can use these grants for CHI, you can do it for co-ops, condos, and single families. That's it. Not multi-family. Now, if you were to do a 2-unit, which maybe possibly they would allow it, because I have customers that trying to make it work, for whatever reason it didn't happen, and not because of the grant. They were actually willing to issue her a grant as long as it was fully occupied. So that meant we could not use that thing. That meant that she was fine with her sister, the upstairs, the downstairs, and it was fully occupied unit, primary residence. They were both going on a loan, they were both being eligible for the grant, and they were both in living at home. So there was no rental. That's going to be that 10 years, that grant. Yeah. So, to be honest with you, they prefer not to have to deal with that because I have to talk to clients. I was even surprised they allowed me to entertain that again. So that's that. But HPD is a little different. You co-ops, condos, and up to 2 to 4 families. So there's more in the summer. So CHI has that restriction. So again, what type of printing you're going to apply for, where are you going to buy, and what type of property it is. You can see that. Okay. All right, questions so far? Okay, so far? Okay. So these 2 grants that we talked about all have a first-time home buyer status. So regardless of being a veteran, if you owned a home within 3 years and still own some type of home, any investment property, in the last 3 years, you are not considered a first-time home buyer. So they all have that hard and fast first-time home buyer rate. Home buyer education is required for both those grant programs. You can do it online or you can do it in class setting, okay? There are orientation workshops, there's a nonprofit housing agencies. So just to give you an idea, there are 4 nonprofits in Westchester County that do homeownership counseling. There's in White Plains, there's two alone. There's Community Housing Innovations, which does the CHI grant. So they're also a housing agency, and they do big grants. So it's kind of like all in one full service. And then there's another one called Westchester Residential Opportunities, which I also used to work, and that was also right here on the Merrimack. These guys are they just moved. Broadway, that's it. Yep, they're right there. And then there is Housing Action Council at Terrytown. Housing Action Council at Terrytown. So each organization is a little unique. The Housing Action Council in Terrytown does the affordable housing management account. If you're looking to find new construction, which is typically what they are, new construction, or fully gutted, rehabbed homes, they're the ones that sell it. They work very closely with developers, and there are income limits on those types of properties that you buy. The Housing Action Council is one of those organizations. And again, they're full service, they do the education, the counseling, and all that. And then the fourth one is Human Development Services Westchester, HDW, and they are out of Port Chester. And they have a full Spanish code. So they make sense. They're really the only organization that does that. And every single agency has some kind of foreclosure, prevention, some kind of rental assistance of some sort. So they don't just do home buying, but that is a specialty that each one of them follows. So there's 4 in one. And in the boroughs, there's 2 in the Bronx. There's pretty much 2 to 3 in each borough. All right, so owner occupancy for these 2 grants, just these 2, that's why I put them first, 10 years. Primary residence. If you sell before the 10 years, they have what's called a recapture provision. So, for example, if you've got, let's say you've got, let's take an example, $10,000, and you sell with after 5 years, you would then obviously have to pay back 50% of those funds in the proceeds of the sale. Okay? There is also what's called a type of assumption of the grant. So if you sell to another borrower that's identified as low to moderate income or income eligible for the grant program at that time, they can actually assume your remainder of your lease and to pay back. So there's also some caveats in that, which means your buyer could potentially be restricted to what they can afford, and you might not really be selling it for a high price if you could sell it and you're not reaching that bar. So that's it. It's all yours. Do whatever you want. Make $1 million off of it. We had people in Peekskill that bought really cheap and were able to sell it for a significant amount of money. And they actually paid off part of the rest of the money because they knew something about it. You never know. But sometimes it might just be chunk change when you're ready to pay it out. It seems like about 20% or so is forgiven annually. So it's forgiven every year. The percentage of those funds is kind of like your way. Okay. All right. So in terms of refinancing, this is one of these types of grants that if you decide to refinance, you kind of have to get the permission of the grant and the nonprofit entity as well. They want to make sure that the rate is the same or better, and then you're not going into some kind of exotic product that's actually going to make it affordable. So they're kind of doing an evaluation. If everything looks good, what they'll do is they'll allow permission for the grant and get a new loan to refinance, pay the old loan off, do a kind of additional return, as long as the monthly payment stays the same or better, and then the lease has a pay off and so you could potentially refinance this. They're a little tricky, but they happen. If you're refinancing the HPD grant, just know it takes 30 days just to get approval to refinance. So you check block factor, you better on that. So there are going back to the income, they're verifying income. How do they verify? Do they go on prior year's W-2s or right? All the time. So both of them do it a little differently. With CHI, they do called adjusted income eligibility. 2 days cost of 6 separately. So there's affordability and there's eligibility. So the tenants is going to look at, especially see, to look at the previous tax return, and then you look at your adjusted gross income, they can look like line item. And that's usually adjusted for any expenses or any losses, things like that. And that last line item on page 1, that's under the adjusted gross income, the eligibility for the revenue. So that's something, you know, you may have made a little bit of money, but maybe you had some expenses, you have a fees, or enough expenses to kind of keep it out and make your income just a little low. Just so you can get it out. That's good. What they'll do then is they'll take the pay stubs, they're accepting from UMass, and they'll project out their remainder of the 12 months affordability. The maximum affordability ratio is 45% debt to income. So what we're talking is about your total housing, your proposed housing payment. We're talking about your monthly minimum debt. So without getting into mortgages, the mortgage conversation too, we'll look at your gross annual income. So let's take a look at $50,000 a year. You want to know what the 45% guys on 45% of that. Annual of $22,500. You just divide that out by the 12 months, and that gives us $1,875. Now, let's say the debt was $500 a month. That's our whatever it is. Okay? So we deduct that from the $1,875. That gives us $1,375. Now we want to separate it a little bit. $1,375 says you cannot have your housing payment more than that. That is the principal and the tax. So whether it's minimum at 50, common charge is 50, and the taxes get total amount, and plus the mortgage payment and the amount. So all of those expenses have to meet within that payment. And they're looking at that. Because if the lender says, oh, you can do it for 47 and 48, it doesn't matter. They have to qualify you at their ratio. Now, I say 45, that's HPD. CHI is actually a little even tighter. They go as low as 43% of the income. And the way they calculate income is very different than the way they calculate income. So to give you a good example, I have a woman right now, I cannot get her numbers to work. Extremely low, they're a brand new job, they can't use the overtime. They're literally going off her W-2s, her API, using the OT. I think they're doing something wrong. But they're saying, yeah, she can easily qualify. And I'm like, what numbers are you using? So a lot of times it's a little bit of this, okay? So the lender says isn't always what they agree with. And so until we kind of get the meaning of the minds, they still have it out with them sometimes. But just to give you an idea, this is what we're looking at. You might be eligible, but is it affordable? Two different conversations and two ways they're looking at your stuff. Good question. All right. So now we're going to go into grants for vets. Yay. All right. So only one.
Yay.
Oh, yeah, that's right. All right. So I apologize because I'm doing a loan for a vet right now, and she kind of brought me up on this lovely little program that I don't know a lot about. I'm going to do some more research, so I apologize, but it did bring me some info. The people there are really nice. I did reach out to them. The bad news is there's no funds for New York.
Oh.
Yeah. But there's funds for Connecticut and New Jersey.
Oh, God.
So
You're lucky the fruit is that way.
I should have never mentioned it.
Oh.
So it's USMHAF is called Military Housing Assistance Fund. It's up to $5,000. It's not a lien like the other grants are, which is kind of nice. And right now there's no funds for New York, but I'm still checking in. I'll check in periodically.
So it changes yearly. So they're
having some compliance regulation issues with New York.
So it's a
pain.
work in. Okay.
Yeah, New York says you can't do this, you can't do that, you can't do this. So New York state laws have issues with the way that these funds are done. So for now, they're temporarily suspended. So they use the words temporarily. but it is about $5,000 in assistance. No lien. It's truly a gift. This is one of those grants you don't have to pay back, which is really nice.
Wow. Prior to closing?
You would
Sorry.
be able to use it for closing cost assistance. Yep. Closing cost assistance, about $5,000.
That's outstanding.
So, yeah.
That's a great amount.
So this is one of those things you can layer. So if you were doing the CHI grant, and let's say at the time this was eligible, you could use these two things together. Or HPD, the funding source is the same. You're not getting money from the same place for these ones, which is kind of great. You can,
That's wonderful. You're moving
And
to,
there's and this kind of program, it would have been, it's statewide, so it wouldn't have said you can't buy here, you can't buy there. It's not like that. I mean, obviously right now you can't do New York. So if you're thinking of Connecticut or Jersey, which I don't think any of you are, you could
well,
use it.
$5,000 to live in Connecticut. I mean, towards the purchase of a home in Connecticut is not bad.
Right, and
It's
it's
a
pretty
good deal.
cheap over there,
Yeah,
exactly.
yeah, that's right.
So the next one is the Penn Fed Foundation. This one you can use in New York.
All
And I'm doing
right.
this right now for the same vet who can't use this, so we're defaulting to this, only this, because we're gonna do them together. This one is a 2-to-1 match. So depending on the amount of money you put into the transaction. So what happens is, and she's doing a VA loan, and, we had the option for 100% financing, but she really wanted the assistance. So unfortunately, you have to do 97% financing in order to be eligible to apply for this particular program. So which is what she's doing, which is fine. She has the fund, she's gonna do it. And they'll give you up to $5,000 in assistance towards down payment and or closing costs. You can use it in a couple different ways. Minimum contribution is $500. So again, for every dollar you put in, they match you $2. So the more you put in, the more they'll give you with a max of $5,000. Okay? So that's Penn Fed Foundation. You guys have heard of Penn Fed Credit Union?
I
So
have.
that's like a military bank. So it doesn't matter the lender. It's not restricted to any particular lender. This is their actual foundation entity because they don't want to. It's illegal actually to restrict your veterans to say you can only get a loan here. So the foundation allows you to use that $5,000 anyway. Which is
Oh, that's
kinda
great.
nice. Yeah. That's a good thing. All right. So nice and sweet these two. I can't tell you much about the other one. I apologize, but I'm
That's
gonna
okay.
keep looking and.
We can't use it anyway, so.
Exactly. Unless you want to go to Connecticut.
That's it.
All right, so there's a couple other grants. These are my favorites because they are statewide, and these are constantly layered with the other stuff. All right, so you could potentially, in a nice little scenario, use a lot of these together. The first one is called the NYSAR Foundation. It's from the New York State Association of Realtors. It's $2,000. Let me tell you, every penny counts. As long as you're willing to write a little quick essay about why you want to buy and what community you want to buy in. It is a lottery. It's first come, first serve. I have a 80% approval or acceptance rating on most of my guys because the minute they sign contracts, I'm like, apply for this thing. This is one of those things that if you wait too long, you could potentially not get eligible for it. So it's kind of first come, first serve. So you don't want to be like almost closing and still waiting to find out that I get approved or not. So the sooner you get your application in, it does buy you some time to wait until your number in the meantime comes out and do it.
First come, first served, really, it's better to do all of this at the beginning of the year.
Yes, could be.
That way all the
Everything is
funds are there for that
replenished.
year.
That's a good question. Not restricted to it, but ideally, yeah, when yes, I would say by October they start running out as well. So this is one of those things.
It's really little contract.
Still apply. I always tell people still apply. I mean, what's going to happen? They'll tell you no. But by just assuming, oh, I'm never going to have a chance, which I've had people do that, and then I've had somebody come in to contract after them and get approved because the other person kind of was very lackadaisical about the paperwork and that's what it is. So I always say apply. Now, the income limits for that is 110% of the Sony May income limit. It's really high for most people. So just to give you an idea of 110%. For Westchester County, you would have your income, it's 110% of the loans. I didn't bring it because this is the vet, it's applies to the veterans. It would have to be more than 100, I think, 34,000. Yeah, so it's pretty high to qualify for that. So the income limits are pretty ridiculous. but most people qualify for it. I'm sorry? 90,000? Yeah, you have to be at or below that one, it's like 136, 146, something like that. For Orange County, it's pretty high. I don't know what it is. I only have the Achieving the Dream here with me. Let me see what it is on Orange County, and I can kind of do a quick guess. On Orange County, oh, there you are. So that's 83, so the low interest rate is probably closer to, and maybe like 120, 130. I can double check. I was sending you. It is, I think it's on their website too, but it's 110% of whatever the low interest rate is for the county. Yeah. Okay. So Sonny Mae for veterans loan program. So Sonny Mae is a mortgage product for anyone that's a first-time home buyer. The difference for veterans is going to be that the interest rate, you get the lowest interest rate with the assistance. But for Sonny Mae in general, on this little green orange flyer, talks about the assistance. So basically, we call it DPAL, the down payment assistance loan. This also has a 10, just so you know, the $2,000 is truly a gift. No lien. This, however, has that 10-year recapture provision, so offset when we against the property. The great thing about the Sonny Mae loan, it is a loan. You just don't pay it, there's no interest on it, but it is a loan. What happens with this one is there's no application except for the time of your mortgage application. If you get approved for your mortgage, you are automatically qualified for the assistance. Just like that. What happens though for regular consumers of Sonny Mae loans is that the rate bumps up about an eighth of the rate if you use the assistance. So for example, the rate on Sonny Mae right now with the DPAL is on the Achieving the Dream, it's about 3.625. Without it, I think it's about 3.375. For vets, you get the lowest rate. So there's no bumping the rate. Even if your income is above the, because there's two income brackets. So your rate even changes. You can go as high as 3.875, depending if your income is over $103,000 for similar system account. So there's what we call the Achieving the Dream. There's what we call the Achieving the Dream and the low interest rate. And it's kind of deceiving because the low interest rate actually has the highest interest rate. So the low interest rate maximum for Westchester County, I believe it's like 1.6. I can't remember off the top of my head right now. But if you go onto the website, it's very easy to find the income limits. Achieving the Dream, I have it here. I can pass it around. For Westchester County, it is 101,470. And I believe for Westchester, I think it's 146. But it's based on household size. So 1 to 2 person, I think it's 126, and then 3 or more. So it's a little bit different, but the rates are higher as your income is higher. But with vets, that's the exception. You still get the lowest rate of both the programs, even with the DPAL, regardless of your income. As long as you don't exceed the highest income level on the interest rate. So the DPAL kind of, so that would be the exception for the vets. You still got to do the 3%, 97% financing, but you get 3% in assistance with a maximum of $15,000, and that kind of covers that. Unlike VA, there is mortgage insurance, but it is extremely cheap. It's very, very cheap. Better your credit scores, the better the insurance. So the DPAL is tied to the mortgage product. So as long as you qualify for your mortgage, there's nothing extra you have to do to apply for that. So a quick scenario, you could do NYSAR, you could do Sonny Mae, you could do CHI, you could do Penn Fed. You could layer all of those. The funding source is not the same. Now, of course, with HPD, Sonny Mae, Penn Fed, NYSAR, I've had people do like 3 or 4 different grants in deals. They get really crazy, but they're doable. Not gonna lie.
So balancing act.
Pulling my hair out sometimes, but it's doable. So, it's a nice little, but this is one of those loans that also doesn't max you out with how much assistance you can get. When it's a soft second lien, only when it's a soft second lien. Like things like this, like the NYSAR, or the pen fat, it's not a lien, so it's not going to affect your combined loan to value. When I talk about the loan, the grant, it doesn't affect us, it's not a lien. Anything that's listed as a lien can affect that, what we call combined loan to CLTV, so it could potentially affect it. But with Sunny Mae, there's no match. Other products, yes. So that's the DeFi. The other one I'll tell you about is the First Home Club. My bank does not offer it. They're very select banks in Westchester County. I believe it's definitely HSBC. It should be a lot more than HSBC. It's M&T Bank, and it's Astoria. And then who's that new bank? First Niagara. Well, I don't know if they do it anymore. So I know for a fact it's Astoria, M&T Bank. So it's a 1-to-4 match savings program. It's a minimum of 10 to 15 months. And you actually go into a bank, you know, through an application, get eligible for it. I think the income limits in Westchester County are 101 for a total household income for Westchester. And it's based on where you live. So with Sunny Mae, it's based on where you want to purchase. With CHI, it's based on where you want to purchase. With HPD, it's based on where you want to purchase. For a Home Club, it's based on where you live. So this is a little different than the rest. You can purchase anywhere in New York, New Jersey, which is kind of nice. Anywhere. There's no restrictions on where you can buy. It's a 5-year recapture provision. So where all these other ones are 10 years, this one's only 5. So now, just to make sure there's no confusion, it's not 10 plus 10 plus 10 plus 5. It's everything is recapturing at the same time. So it was like 30 years. Two totally different recapturing methods.
Just to be clear, this last one you mentioned, is only for veterans or is it for everyone?
This is for anybody and everybody. Sunny Mae does have a veterans feature where it reduces the interest rate. Okay, significantly. I'm sorry? They get the lowest interest rate that Sunny Mae offers.
Anybody can apply.
Anybody can apply for Sunny Mae. They fall into the income bracket which dictates their interest rate. So unlike credit, it has nothing to do with credit. It has to do with your income that's the interest rate. This one's called the Federal Home Loan Bank. It's the First Home Club Savings Program. It's a nice program to do if maybe you have some credit issues, you need to put some savings together. So it's a nice thing, and it kind of keeps you engaged because you know you're making payments every month into the account. There's a 4-to-1 match. So for every dollar you put into the account, they match $4 up to a maximum of 18. The grant is $75. Whatever you need. Costs, condos, and 1-to-4 match. There's no restrictions as to where those funds need to be used. That could also be used with Sunny Mae. That could also be used with the CHI grant. Let's see all 3 of those together. Those I did a lot of those. And then I always put the money in. So these 3 here can easily be layered along with the CHI grant. Wow.
It's a balance.
Yeah.
Quite the balance.
Like
Yeah.
coupon.
But here's the other thing, you know, if I'm gonna send this to you.
I'll leave it.
Dave, I'm gonna send this to you.
Okay.
I'm gonna email it to you.
And I can send you information more. I don't think I sent
And-
you first home club stuff.
Oh, no,
I mean,
no,
I
you didn't,
I don't
right?
think so, no.
No, I'm gonna email you, this PowerPoint and also the documents in PDF. If you wanna share it.
Yeah. So let me just clarify. You need to be income eligible for each one of these grants. So it's great to layer them, but you need to make sure you're eligible for all of them. And each one has their own eligibility requirements. The income limits always going to be minimum is higher. Yeah. Yeah, when I can't get anybody in anything else, I always get this. So Sunny Mae is a mortgage product. It just has down payment assistance. So I kind of talk about it in a separate. And the assistance on that is a maximum of $15,000. 3% of the purchase price is a max of $15,000. You will never ever get less than $3,000 on that. No, it will reduce it. In terms of liens, when the bank is looking at it, it is adding when it comes to combined loan to value. But in the transaction, it will reduce your loan amount by that $10,000. Yeah, good question. I just want to make sure anybody else can check.
So CHI and HPV, those are the ones with the leads. None of these have.
They do. So First Home Club is a 5-year recapture provision subordinating lien, and Sonny Mae is a 10-year.
Yes, but these
They do.
are these.
With Sonny Mae.
These are statewide programs, that's why they're all together. So these are anybody, New York State, no restrictions. The veterans one, specific veterans, not New York one, no.
Just to be clear,
Yeah.
houses have to be purchased in New York, and you have to be a New York resident.
You do not have to be a New York resident,
That's what I mean.
but you have to be, NYSAR is very specific to a New York purchase, don't have to be a New York resident. Sonny Mae is specific for a New York purchase, but you don't have to be a New York resident. And then Federal Home Loan Bank, you must be a New York or New Jersey resident. Purchasing New York or New Jersey. You can't be coming from Connecticut trying to do the program. Yeah, there's so many
It
people
happens.
try. And
Yeah.
so good question again, because that is resident specific. You okay so far?
I got one question.
Yeah.
I think that's the one I heard about, the Federal Home Loan Bank.
First Home Club?
Yes, that's the one where you sign like a deal, like where it's like for, like, it says minimum percent is 24 months.
Mhm.
But you guys like, deposit a certain amount for that contract?
Yeah, so you would have to put in, so for example, 1880 is the total that you have to save, so that would be broken up in 10, 11, up to 24 months. You can choose how much you want to put away. When you're done with the account and you're ready to actually get your pre-approval, all of this has to be done within 24 months from the time you enroll in the program, which is tight sometimes because if you have some major credit issues and you're not really working on them, I mean, it gets a little tricky. I have a couple people that are calling me now, I can't do that program, but they're like, well, if I'm out, I'm out. Let me just go to another bank. So, thank you for segueing me into this. You have to take your mortgage with the bank who uses the savings account. That is the tax. So, you have to do business with HSBC or M&T or Astoria.
Can you do it at like, so let's say you don't know when you apply, and then can you change over at that point in time? Is there like a time restriction? Did you have to have the, so let's say I'm with maybe Federal, and I go and I pursue HSBC for that. And HSBC says, well, you don't check with us, so no, you can't do it.
No, they won't do that because you're actually going to open up a checking account.
Oh,
They have
okay,
you
so
open up
it's
an
initial,
account.
okay,
Yeah.
oh, okay,
So
It's a no-fee savings account. So
okay.
they won't charge
So you don't have to have
minimum
been,
or- Nope.
right, you don't have
It's
to
a
have been
special
a reg-
dedicated account just for that program. Yeah, good question.
So that means that in order to get that grant, I would have to go to the bank and open an account tomorrow.
Nope.
And it might 10 to 24 months.
No. You have to do an application, a grant application to enroll in the program. You approve, thank you. Be approved, and then go in once you're approved, and then open the account. It's a very special account, a dedicated First Home Club savings account.
10 to 24 months later, that's when you could utilize the grant.
Well, if you do the 10-month savings and you're ready to buy in 10 months, you can actually start. You could, 10 months is the minimum amount of time you can be in the program. Maximum 24 months. So if you do it in 10 months, you do the savings for 10 months consecutively, you're ready to go, you can be like, listen, HSBC contact, let's do my loan.
Not money.
It's like 187.50 or something like that every month for 10 months, and then it starts to go less the longer you do it. I think it's like $77 for 20 months, something like that. It could be, yeah. Some people do that. Some people actually round it out, and then they end up a little bit more than what the savings goal actually needs to be. So you could potentially do that. It's always your money. If at the end you realize, you know what, I don't want to do this, or you become over income, because that happens during the 24 months. It's happened a bit. You know, so there's different reasons how you could become ineligible. With all of these programs, is down to the penny. With the Federal Home Loan Bank, when you're enrolling, it's about what your income was at the time you enrolled.
And they will honor that even if you get a pay raise, you have some overtime. However, let's say you're single, you get married, you're ready to do the first home club, but that spousal income puts you over at $3,000. Stay engaged. Well, here's the problem, right? I need my spouse to be able to afford what I want to buy. You have to kind of decide if you want to walk away from the grant. And I'd like to do that. You're like, I don't need it. We got more money now. So, but it is a nice thing, you know, if you just want something to keep you engaged and kind of keep you motivated. I had somebody that called me yesterday for a gazillion reasons I will not share. She's just like, yep, I'm coming with you guys. That's it. I'm like, all right, whatever. She walked with me. So, it's a great program. I think it's phenomenal. I've been doing it from the time when I was in the nonprofit sector for probably 7 years, and I've been doing it for the last 4.5 years. So it is something that I have been doing for many years, and I think it's a great grant. If you're that person that wants to wait, take your time, work on credit, work on savings, then the first home club is for you. Just remember the commitment is with that bank that you're going to do savings with. Now, the nice thing about it is that bank declines you and says, you know what? No, you don't qualify, you don't meet any of your program guidelines, you can actually go to one of the other banks and get transferred. So I can tell you a story. A bank only does Sunny Bank. So what if you need to do, you want to do FHA? Actually, you know what? Speaking of that, I believe as of yesterday, they do not allow FHA. I believe, if I'm not mistaken, it's either going to be the portfolio product of that bank. So it's really important to do research when you do that first home club. Because I believe now it's either the portfolio product or just the FHA or VA with it. For first home club. I don't even think you do VA with it. So first home club, you know, it's kind of unique. So you, again, it's got to meet your needs, what you want to do, what you think you're doing.
Who's the bank that's approving everybody? What bank should I go to, you know, and start putting
Well,
in
it
my
depends on what you need. Every bank is a little unique. You know, definitely got to do a mortgage class. We're going to get into that a little bit more, but
Bank of America again?
you're talking to a whole nother company here. Come
Our
on.
competitor.
Well, no, definitely not. Trust me. I'll leave it at that.
They'll
Not
blow
worried
them
about
out
Bank of
the
America.
blow them out of the water, right?
So let me give you guys an example, some scenarios. So we're talking about that $300,000 purchase price range. Let me show you what it could look like. So we've got a purchase price of $300,000, a down payment of 3%, which is $9,000. So that gives us along $291. Let's put it in black and white, kind of makes sense. The total that you would need between your closing costs and your down payment would be about $27,000. Right? It seems like a lot of money, right? And that's assuming 6% in closing costs and 3% in down payment. So that's total goal. So let's say you were to do a CHI grant. The scenario here, you would get a CHI grant of $12,250 because it could potentially go up to $12,250 for down payment and a closing cost assistance. Let's say you get the Sunny Day DPAL for $9,000. Let's say you're a vet and you're going to throw in the extra $5 in there, and then you can apply for the NISA grant. That gives you a surplus of $1,250. You have $28,250 that you could use in the transaction. Bam, just like that. Not one penny to that. But you would have to. So that would mean you would have to lower your loan amount. They do never let you walk away from money. Never. Ever. Ever. Not even 50 cents.
If they do, be
Put it
afraid.
somewhere.
Be afraid,
No,
right?
they'll put it somewhere. They'll reduce your loan by 50 cents. Yeah, you have to be sent 97% financing. What were we gonna ask? Mhm.
The whole process?
For the actual CHI grant application. So from the time that you apply for the CHI grant to the time you wrote the contract and your commitment, anything like that, it's closed.
Well, no,
Okay.
you already got one.
Got my certificate, did all my counseling, did all my classes. I got my 60-day clock running now. So how long does it take to get approved for the actual grant from the time of application? So that's usually about 4 to 6 weeks. So I would say about 2 months just to get the phone call, you review your application,
everything looks good. Have to make your plan. If you're really busy, bring it upon us. I'll wait till 8. You know, complete application. I'm telling you, if you can complete it, so fast, so fast, you can put any answer, make sure it's organized, you can really stop. I used to do that. Next. You can get to the rest. And then we'll call you a couple days later.
HPG scenario. So, buying the borough, maximum grants. I put the China's HPG set up at 15,000, say it before 15,000. The decal, you use Sunny May decal, that's 9,000, you say you're a vet also, you can apply for the homestead and the night guard. It's $2,000, gives you a surplus of 31,000. So, this, the idea is just to show you how this can be layered and how you could potentially. So if you're not getting the 10 side, you use about 5,000. So, you know, if you do have too much money in the transaction, we're no longer talking about a loan amount of 291. It could be 289, or 287, or whatever it is. Because again, you cannot walk away from the cash.
Where do we know? Like, let's say it's a scenario on the top, right? And we have the 291, where we the fee is like. How do we know how much we pay a month from there on in? How much is the month
For your mortgage?
for the mortgage?
Well, you're going to know based on what your loan amount is going to be.
So your loan amount will be determined based on how much funds you're getting, your funds and the grant funds. And then during your setup of your profile, this is, you know the property, you know how much taxes, you know what your affordability needs to be at, and you know where your loan needs to be. Your loan amount is going to determine your monthly payment based on the rate that you're being qualified for. Usually 30-year fixed rates. These programs do not allow you to do ARMs and for some of these 10, 20 years, you've got to do 30 years. You could do a 40-year if it's available.
For 30 years, 30 years, and it's still like that for the 30 years.
Right.
It's nothing.
Right. No change. Any questions?
A lot of people do. A lot of people have 30.
I know you said that the restaurant
So yes, okay. So let's talk about other grants in other places. So every county, except for Putnam and Dutchess, for some bizarre reason, Orange County and Rockland County have local grants. Rockland's kind of funny because Rockland has very specific grants just for residents. If you're looking to buy in Rockland, aside of these that I talked about, with the exception of HPD and CHI, you could use Sunny May, Nizar, First Home Club out in Rockland County. But if you want to use any of the local grants, which would be the equivalent of a CHI grant in that area, you have to be a resident. I found that we've done a lot of research, and a lot of the times you have to be a resident in Rockland. Orange County does have RECAP, which is an organization out of Middletown, New York. I'm actually from Orange County. So RECAP is one. They actually have a very similar grant to the CHI grant, which is a rehab and down payment program system. I forgot what the funding source is for that one. And then there's also Path Stone, which is out of Newburgh, and they also have grant funds as well. Huh? Oh, Newburgh, Path Stone. Path Stone. Path. Yeah, Path Stone. PATHSTONE. So those are two organizations that do like some big meaty grants out there. The income limits are very different. You just have to check what the income limits are for that. If you're going to do Sunny May out in Orange County, just to give you an idea, for the Achieving the Dream, which has the lowest interest rate, Orange County, 83,230 total maximum income. That's just for Achieving the Dream. The low interest rate will be a little higher. I'm just not sure what it is. It'll be somewhere in the hundreds probably, or high 90s. Yeah. But you'd have to meet that income limit for Sunny May if you're going to do Sunny May. We usually do Sunny May with this one. Sunny May would be for Achieving the Dream. So if you're at 89, then we have to just check to see if you qualify for low interest rate, and then you just go into their higher interest rate product section of their product. There's two income limits that Sunny May uses to determine your interest rate. You'll get the discount no matter which one you're going into as long as you want.
We don't get to see how that they would trust. Connecticut, same thing in Connecticut. Connecticut has a ridiculous slew amount of grants as well. So if you're interested in buying Fairfield County, because it's considered a Rhode Island consensus tract sort of area. There's some parts up to Bridgeport. There's a lot of grants out there. There are very similar programs to the ones that I talked about that are very low-cal. Again, with the income requirements, I do have a lot of those things. I don't bring them to Westchester events because before the events are out there. And in New Jersey too, there are some programs out there as well. Again, everything's based on income. So it'll either be based on you being a resident or just buying into that county. Sony May has is part of the Housing Bond Finance Agency. And so there are several of them throughout the state. So in Connecticut, the equivalent of Sony May is called CHAPA. And it's Community Housing Finance Agency, so CHSA. So they also do down payment assistance as well. Their rates are ridiculous. I'm so excited because I can finally do those ones. They're at 2.8%.
Whoa,
Yeah.
that's nice.
No one has those.
I've never heard of anything like
Yeah.
that.
Then in New Jersey, they have what's called HMFA. So that's the Housing Finance Mortgage Agency. So that's in New Jersey. That's their bond policy equivalent of Sony May, but their rates are not so good. But, if you need that extra cash, you need the assistance. There's flexible underwriting on these programs. So we do alternative credit and things like that. Maybe you don't have the 3 trade lines, maybe your scores aren't that high. These are those types of programs that really are very flexible with working with you and around your community. But so there's a lot of different stuff out there.
That's what I was thinking. If you look up and you just
HMFA, CHFA, CHFA.
can you use any of these programs as well? Like
No.
government.
Penn Fed, yes. So
Okay.
like the veteran stuff you could use in Connecticut because that's kind of national. So there's a difference between state, county, and national. So the vet stuff would be national, except for New York. NYSAR is New York State Association of Realtors, is very specific to New York. The First Home Club is New York and New Jersey. Connecticut does have a program there, but again, you've got to be a resident for this type of First Home Club Max programs.
So besides these programs, there's nothing else.
For Westchester,
Westchester
I wish.
County, yeah.
I wish. Yeah, this is meat and potatoes for Westchester. Aside of affordable housing, which is an option, definitely take a look at that. Because sometimes it's brand new construction. What's that?
Oh, no, actually, I want to buy a shelter.
You want to buy shelter?
Yeah, that's Shelterville.
City, they're pushing for revitalization in Newburgh. Pat Stone is like on the head of all of that too. I actually went in with the counselor. We drove through neighborhoods, the downtown areas, because you have a lot of those condemned properties where they have like squatters and stuff. It's pretty bad. There's a lot of money they're trying to dump into the city of Newburgh to revitalize, especially by the waterfront.
Yeah.
Particularly there. It's really
Waterfront
nice.
is nice though.
Yeah. They're doing more. I lived
The
there
shootout
in Newburgh
gallery.
before they revitalized it, so you can just imagine what the heck it looked like when I was
It has
there.
a lot of potential, that area. I mean,
Absolutely.
it's dangerous, but
I've
it's
seen it.
nice.
I've seen it before they cleaned it up, and let me tell you, I'm like, oh, okay, so better going through there.
That one is pretty bad.
I was looking around that area.
Okay. Okay.
Even though it's really far away, but I was like,
The commute's not too bad. Well, are you coming into what, White Plains for work or
yeah, white thing, but then.
training? Isn't it on the same line?
That's the
It's on
Hudson
same
line, right?
Isn't it?
No, the Hudson line is the green line. It doesn't stop in White Plains.
Oh, okay.
How far is it? Up there.
You can check it.
Yeah. So from Poughkeepsie, it's I think like an hour and 20 minutes on the train. to get
Judy, you
to
said
Manhattan.
Fishkill stop?
I thought Fishkill was on.
Let
this
me
line.
check, because I could be wrong.
So,
I like the East Coast, but
any other questions about the grants? Okay. A lot of information. Was that helpful, the little chart? Okay, good.
Sounds all fancy.
Trying to get my thoughts together here.
One,
Okay,
two.
so, all right. So would you say that it'd be best to get pre-approved first and then apply for each grant and you find out where you at?
Good question. So I always recommend, if you're definitely interested in the grants, you want to start at the nonprofit level first. Because they're really going to tell you, hey, you qualify, you don't qualify, you're maybe on the border of qualifying. Because when you get to your lender to do your pre-approval, one, they're going to be able to recommend who to go to that's reputable, that understands the grants, that does allow their grants, so that's important as well. And also someone who's, sensitive to different things. That's another thing too. So I would always start at the nonprofit level, because then when you're talking to your loan officer, they're asking you, well, how much are you qualified for? How much are we using in your scenario? Because you go and say, well, I don't know. It's hard to do a pre-approval, we don't know what we're working with. We can guess, which is not always good, but you want to kind of talk to the nonprofit first about, well, what are my options and what are the chances for me being qualified? How does this work? What do I need to do to be in a position to be eligible for the program? So conversation with the nonprofits is always important. Stuff like the DPAL, the NISAR, those are kind of always tentative. I mean, the DPAL is pretty again, automatic. You qualify for the loan, you qualify for that assistance. So that's probably going to be the easiest grant you ever apply for, because there's nothing for you to do except for apply for the mortgage. Good question. Any other questions?
Would any of these apply if, let's say, you're refinancing? Any grants or any type of, no, right? So this is just the initial
There is one.
set you off, bon voyage type thing,
There
right?
is one grant. It's called the MAP grant, and it's only eligible for Brooklyn. Maybe some parts of Queens. And that actually is to help bring down the principal for distressed homes. So there are some. No, let me rephrase it. There are some programs. I know there were in Westchester for their foreclosure prevention. So if you're behind in taxes, or depending on what's the reason the need for the refinance, you could sometimes find funds to help the principal with that, to get the loan down, reamortize the loan, the lower. Sometimes there's money also to help when you're current, if you're in back taxes. So there are programs, I believe, WRL, I don't know if they still do it. When I was there, they were doing stuff like that. Not a whole lot, but there was some stuff that they did. So there are some programs out there. Again, you got to be income eligible or be really at risk and severely distressed. So it depends on the story. All based on need. So there isn't this, oh yeah, that program, yeah, I'll qualify for all of that. It's not going to be that kind of scenario. You have to have a conversation with the counselor about, well, what am I going to be eligible for? But again, whoever you work with as your lender, just make sure you're familiar with the program. You want to have them structured really right, and be able to have dialogue with the nonprofit as well about, okay, well, how are we doing this thing together? The subsidies that we're getting, where is it going to be applied? Great, you got approved for $25,000. The loan officer puts the full 25 into your scenario, and you go, oh, wait, it's for rehab. Oh, I'm I've seen it too.
Other questions?
Yes.
If anyone has any questions, could we share your contact information so
Absolutely.
that they could reach out to you?
Yeah, if there's like a blog or a section, I don't know,
Yeah.
whatever you want to do.
So on our Google Plus, under our video,
Oh,
because
okay.
it's now recorded, lives on the page,
Okay,
is your Prezi link.
okay, great.
Can I post your contact information? Okay,
Yeah,
so we'll do that.
Absolutely. Okay, absolutely. So hopefully this is helpful, and it's a lot.
Can we get a round of applause?
Oh, you're awesome, guys. Hopefully it was loud enough. Last time I signed in, I couldn't hear the guy.
Well, I hear it's better.
Okay, good.
We'll watch it later.
Okay, yeah. Let's
Put
take a
you a
look.
link.
I have to work on what I could do better in my presentation.
Wait, he's possibly watching.
Oh, good. Yeah, there's extras here. Oh, this is awesome. I love it.
All
So
right.
the next class, just so you guys know, the next class is on credit. And that's usually my very favorite class.
Oh, that is fun.
I
Oh, wait.
have a lot of fun with that one. And I bring in some cool stuff for you guys to check out and some advice and tips. I also have walk the walk, so I'll share some more stories
I have
with you.
to promote that on Facebook.
Okay.
I was actually promoting today.
Okay.